It's Friday, November the 11th. Two big things have happened this week. We had an election.
Yes, we did.
And then we had a big-time rally yesterday, over 1,200 points on the Dow.
Let me just say before we get into that, happy Veterans Day.
Absolutely. Absolutely.
For all our clients and all our listeners that are veterans, male and female, for the dedication, for the sacrifice, for everything you've given us to give us the ability to be here and to be free and have a company and work. Thank you. Thank you. Now, the two big things this week.
All right, so we had a little small election that happened on Tuesday. They still don't have all the votes counted, which just drives me insane. But that's a different hot take on a different day. Yeah. But what was your takeaway from Tuesday?
Well, you can only smile. It was the stock market's reaction on Wednesday to Tuesday was anticlimactic.
Yeah, the market was down, but it wasn't down big. I think my takeaway is gridlock is good. The purse strings will be controlled, but it looks like that the Republicans will run the House. Senate's still very iffy with the counting going on out in Arizona and in Nevada. But I think that gridlock is good. Market's going to like that. It likes having different the executive branch being different than the House or the Senate. So I think that was my big takeaway.
Yes. The next big one came with the Fed's meeting this week, and not the Fed's meeting, excuse me, the Consumer Price Index, yes. The inflation numbers. Thursday morning, 8:30. We got inflation numbers year over year on the month of where we were in October, and those numbers came down. They were anticipated at I think 7.9% inflation year over year, and it came in at 7.7 something like in that. So it came down, and since Thursday, Friday, you're seeing green arrows there, and we joked a little. Please understand, it's joking a little, being fun, having fun. We said, okay, now's the time to jump in. Let's
get the money buried in the backyard and put it in the market.
Yeah.
No, I think we're in a secular bull market right now, and a secular bear market, I should say. That we're going to see rallies like this when we get some good news, but we're still very cautious because of the Fed's still going to move rates higher. Food costs are still going up. Gas prices are going to go up this winter. Earnings are down for 5 consecutive quarters. Layoffs are starting.
We had a list that we read on Thursday's show of layoffs that was 3 lines in a paragraph of companies. Yeah. So yes. Big layoffs are underway.
So I think we'll take what we got yesterday, but we expect to see some reversals coming in the next couple of months. So we'll be ready when it's time.
What it has done is we promoted and still promote the Treasury Notes, the 3 months and 6 months. We are questioning and observing that those might have peaked with this inflation coming down. So we are making some last-minute purchases. We'll have some money coming up in November. We'll have to take some looks at of where trends are going. But that market might have hit a high water.
It could have been a high water mark, but still you're going to be able to get, at least today, over 4 on 3-month and pushing 4.5 on 6-month Treasury notes. So it's still a good place to be and has very, very low risk. So that has not changed.
Now, the only other thing that we would say to you, it's moved us closer to when we probably are going to start walking into the equity market and making buys. We have the list. We know what we want. We just need to see a little more direction from the Feds that they feel like either it is rolling over, they are slowing down, they're going to pause, whatever the language is that would indicate to us that things are changing. Then we're going to begin to walk into
because you can't fight the Fed, so you don't want to be on the wrong end of that. So until we start to see those indications, we're going to be just hanging tight.
So the theme is don't take the head fake. We have everybody's account at some level in the market. You're participating in the upside. We have good, solid Treasury bills, and we have cash. We're now just being patient and being prudent because it is your money.
And your money matters.
We'll see you next week.